Hey there, welcome back to my channel, it's me the Mind Injector. In this video we're going to dissect the highs, the lows and the downright fascinating details of NIO's journey in the tumultuous world of EVs. But before we get into the nitty-gritty, let me hit you with a question that might just blow your mind. Have you ever wondered if a company's struggles are just a pit stop on the road to massive success? Well, stick around because we're about to unravel the enigma that is NIO. So, let's talk numbers. It's been a rollercoaster of a year for NIO shareholders. Picture this. NIO stock has shed about 18% year to date. What's behind this? Well, it's a mix of price wars with competitors, the tag of unprofitability hanging on NIO, and the ever-growing competition in the electric vehicle arena. But hey, it's not all gloom and doom. In October alone, NIO delivered a whopping 16,074 vehicles, a jaw-dropping 59.8% increase year over year. That's not a small feat, and if we zoom out a bit, the total year-to-date deliveries stand at 126,067 vehicles, a solid 36.3% year-over-year growth. Now, that's a comeback story in the making. But hold on, there's a twist in the plot. Earlier this month, NIO dropped a bombshell, a workforce layoff of about 10%. Efficiency and cost-cutting were the reasons cited. Tough decisions in the face of fierce competition, they say. But that's not all. NIO also spilled the beans about delaying or winding down projects that won't contribute to financial performance in the next 3 years. It's a strategic move, and the market is buzzing with speculation. Now, let's talk big players, the institutional investors. Tracking them is like reading the tea leaves of the stock market. In third quarter, 446 13F filers disclosed the stake in NIO stock. But here's the twist. It's a decline of 15 filers from the prior quarter. Institutional interest might not be soaring, but it's a dynamic chess game. And here's the chessboard move. Institutional ownership declined, but the put or call ratio increased to 1.2 at the end of third quarter, up from 0.9. That's over 54 million puts and over 45 million calls, hinting at a bearish option stance. The chess pieces are moving, and it's a strategic dance. Now, let's tackle the burning question. NIO's cash position. The company is burning around billions every year, and it's a concern. With approximately $4 billion in cash matching its debt levels, the clock is ticking. But here's the catch. NIO's cash may only last 2 years at the current burn rate. However, there's a twist. Cash losses could be lower over time, especially with falling interest rates and potential upticks in EV sales. But profitability is about 3 years away. Will NIO survive its cash burn marathon? That's the million-dollar question. And then there's the concern of share dilution. Many EV startups play the dilution card to fund losses, but NIO has been an outlier. Minimal dilution since early 2021 after a considerable dip in 2020. Could they tap into equity markets again? Absolutely. But how much is too much? It's a delicate balance, and the future is uncertain. Let's talk value. NIO's 2032 profits are expected to come in at $2.17 per share. That puts the forward price-earnings ratio at just 3.5 times. Now, that's intriguing. It's decent value, especially if you're playing the long game. But here's the twist. Major Chinese EV inroads into the US market might not be on the horizon. NIO could carve out a niche in Europe and the Middle East with its battery-swappable EVs. Analysts are estimating sales to quintuple by 2032. Paying 1.6 times sales for this year's earnings, it seems justified. In my book, NIO is positioned for long-term gains. It's a bet worth making if you're in it for the long haul. Of course, it could be a value trap, a risky gamble. There are no guarantees in the stock market, and NIO's fate is hanging in the balance. Now, let's talk tech. NIO isn't just a player in the EV game. It's a tech powerhouse. The battery swapping model is a game changer, avoiding those long charging waits and offering a superior user experience. NIO is leagues ahead in this department. Bold designs and premium interiors set them apart stylistically, adding the touch of brand prestige. And here's the kicker. In-house manufacturing of key technologies like the NIO Pilot Advanced Driver Assistance. It allows for rapid iteration, keeping them ahead of the curve. Also, we must mention the Nomi AI in-car assistance with intuitive voice controls. That's a tech mode right there. And let's not forget the ownership models, like battery subscriptions purchased separately from vehicles, providing some sticky revenue. In my eyes, NIO's technology is the secret sauce. It's not just about electric vehicles, it's about redefining the tech landscape. Before we get into the exciting details, let me introduce you to Moomoo Financial. If you open a brokerage account with Moomoo and deposit at least $1 using the link in the description, you'll get a chance to draw a free stock worth up to $2,000. But that's not all. If you make a net deposit of $100 or more, you'll receive not just one, but 5 free stocks worth up to $2,000 each. And if you're really serious about investing, you can deposit $1,000 or more and get a whopping 15 free stocks, bringing your potential earnings to a staggering $30,000. So sign up now using the link in the description and get those free stocks. Now let's get back to the video. Zooming out, let's talk macro trends. China's EV sales are projected to grow at an 18.4% compounded annual growth rate through 2030. NIO doesn't need a massive share grab. It just needs a piece of that growing pie. Government EV incentives are the wind beneath their wings as the economy picks up steam. But geopolitical tensions are the wild card. NIO seems to have Beijing's support so far, but the road ahead might not be smooth. Near-term volatility is on the horizon. China's economy is facing headwinds, and the EV sales have hit a speed bump. But look 5 to 10 years down the road, and NIO has the ingredients for potential upside if they play their cards right. Now, let's talk buzz. NIO shares are trading higher, and here's the scoop. NIO's president and co-founder Qin Li Hung slammed rumors that the company was on the brink of going out of business. NIO will not go out of business. There is absolutely no possibility of it going out of business. Please feel assured to experience and buy NIO's cars, said Qin. Bold words, and it seems to have injected some positive vibes into the market. The president highlighted the company's 40% growth and hinted at the need for further improvements in the growth trajectory. And if that's not enough, NIO announced that its 2100th power swap station is now active. It's a testament to the company's commitment to its innovative charging infrastructure. But let's not sweep the concerns under the rug. Dilution is the elephant in the room when it comes to NIO stock. With 3 or more years until profitability, it's a bumpy ride ahead. But at current prices, NIO appears reasonably priced with a margin of safety. Realistically, buying NIO stock as a long-term holding seems to be the only way to ride the wave. Macro trends are looking favorable in the long term, and bargain hunters with nerves of steel might find the pot of gold at the end of this rainbow. And there you have it, the wild, unpredictable and utterly fascinating journey of NIO. This isn't just about stocks, it's a saga unfolding in the world of finance. Will NIO be the phoenix rising from the ashes, or will it be a cautionary tale in the EV revolution? Only time will tell. This is it for this video, guys. Thanks for watching, and please make sure to subscribe, like and leave a comment down below.